Most traders don't lose because they can't trade. They lose because they're trading the wrong stocks. If your watch list is 50 names deep and you're still chasing candles, this episode is your fix. In the next few minutes, we'll show you how to build watch lists that actually work with tiers, catalysts, and stock personalities, so you know exactly what to watch, what to ignore, and what to trade before the bell even rings. Let's get into it. Welcome to Beyond the Trade, where the levels don't lie, the trades hit hard, and we're here to cut through the noise. No scripts, no safety nets, just raw market talk. Lock in. It's time to go Beyond the Trade.
Beyond the Trade is for educational entertainment purposes only. Nothing you hear should be taken as financial advice. Always do your own research and consult a qualified professional before making investment decisions. My friend.
My good friend Mike, how are we doing, my guy?
Doing good. Feel refreshed, back from Florida. Got a little sun, a little nice temperature. Good time, caught up with some old friends. Good to be back, though.
Don't get me too excited.
Oh, no, never. Don't
Time
be too
with
excited.
Time with friends, fun in the sun, and I'll tell you what, there's nothing more fun than building a watch list that actually works.
Oh, buddy.
I think that there's a lot to talk about in this one, and I think this is a topic that many people request, so I think it's one that we should really go into pretty deep here.
Yeah, it's kind of a follow-up from, 2 weeks ago when we did the Monday market prep before the bell thing. I mean, that touched on getting everybody ready, and this will go, I guess, a little deeper on how to find those stocks to add to that list.
Exactly. And how do you find them? I get this question a lot. How do you find these things, and how do you know which ones are the right ones once you've kind of identified some stuff that a lot of people are talking about that might fit a mold of things that you like to trade? So it's if your list is just cool tickers, it's not a plan. And I think that means, the coolest ticker in is probably the thing that's been ripping a lot.
Right.
or the thing that's down so much it just can't possibly go lower, which we talked last week about not catching a falling knife. Again, this is a good little follow-up episode. First off, too many names, there's no focus there. If you're watching 30, you're watching none. And if you have no criteria, really, if it's just things that you come across on X or, CNBC, I hope not, then you should be doing the opposite. But then there's nothing, right? We're talking liquidity, range, got to have a clean chart, clean support and resistance levels. Bingo. Not chasing what's loud, again, like I just said, whatever's going off on the socials or in the media, instead of what's actually tradable and what fits you. Ignoring the market or the sector context, is a really big thing. I would say, if the stock that you're watching is doing the opposite of SPY or QQQ, then you need to be careful, because when the market's up and your stock is down, that means that there's probably something like that. Doesn't mean it's just an automatic dip buy opportunity, right? It doesn't mean it's on sale. It means something disproportionately wrong is happening. And the flip side is also true. The first example would be a time to go short, right? The flip side of that, where most people are longs, if the market's down and then a certain stock is trading higher, that is a good one to potentially look at going long, because if it's up when the market's down, which you could see, there's been a number that we've talked about that have been like this. Intel is one that is honestly it was like that for a lot of the last couple of months, just ripping when nothing else was. And those are the ones that you do need to put on your watch list. So instead of ignoring kind of like market/sector, context, those are the ones that you specifically need to watch, right? And you never want to trade, and this is kind of more of an options note. You never want to trade anything that's illiquid or has wide spreads on the option, meaning the bid to ask is very big. And you're going to get slippage on those contracts, so be careful there. Big Mike, time. Which ones stick out to you the most here?
I mean, they're all very true. I think if I look back at when I started, I would have a list that was a mile long of all these different stocks. But as you get more groomed and become better at trading, I'm looking at my list in TradingView right now, and there's probably 50 stocks on it. That's my master list. But then from there, I can break it down into, a handful of stocks. But these are, I have all the futures. I have SPY, Q, IWM, SPX, VIX. These are some of those I use for other purposes, but like actual individual names, there's maybe going into the week 5 on my list come bell time on Monday. Well, this week will be Tuesday. Remember that, guys. Markets close Monday. But yeah, it's keeping the list small so you can have quality stuff in there. I was going through my list today. I said, okay, I'm going to set up my A, B, and C list.
We're going to get to what that means. We're going to get to what that means.
Yeah. But I had 5 stocks on here, and 2 of them I scratched off after I really got looking at them because the charts were a mess. There was no clear support resistance. It had been bouncing up and around in way too big of a range. So that's how I find them, basically, is I'll go into TradingView and I'll start at the top of my list of those 50. Of course, some of them that I'm not real interested in, like I keep, for example, I've got US 100, the 10-year, and that's more for checking interest rates and things like that. But I'll start typically with Q, SPY. I have ARC up there, IWM. I'll look at those, and then I go into the individuals. What I'm looking for is something that sticks out to me immediately on a one-day chart. And if it's a little bounce at the bottom of a long bunch of red candles, okay, it's got my interest. Now I'll zoom in a little bit more and look at it that way. But I'm looking typically for a pattern, very solid support resistance. Where is the RSI on it? Things like that.
Good deal. Now
and
you
then
mentioned...
I write them down. So I may have 10 at that point. Then I'll go back and dive deeper into them and eliminate half of that and come up with 5 that are good.
And you mentioned your tier 1, tier 2, tier 3, and now here's kind of the game plan for that, right? And I think this is a great way to kind of categorize the different things that you're watching. And I also want to, I think that there's many different ways that you can look at this, but I think this is one good way as kind of a rule of thumb. Your tier 1 is really going to be your A list, right? It's you're able to put clean support and resistance levels on there. It's got a good range and ATR stands for average true range, and that's kind of my bread and butter. It's really just how much does the candle move top to bottom from like wick to wick, reaching, not just where it opens and closes on average over a certain time period. So it's just could be from top to bottom, how much does it move in 10 days? I like to look at 10 days because, there are a stock could move from 30 to 40 in one day. And even if it's 10, if the stock is moving 10% of its, stock price in one day, wick to wick, that could, at $40, that's $4. At $30, that's $3. So you kind of, it's, you don't want to look too far back, but you don't want to look too close. So I like 10 days in general. Tight spread, meaning, specifically options. But this could be for commons too. You don't want to just slap the market price on something that doesn't really have good liquidity, right?
Going back to watching the volume on it, it's got to have volume. That's
like IMOS. I remember I mentioned that one a while back. Like that's a $35 stock that on the equity will have $1 spread. So, that's what I mean. It doesn't necessarily mean options, but it still needs to be liquid. That'd be one that I'd put in the B tier, right? Because it's not that liquid, right? So, there needs to be a clear if X then Y plan. I think that's pretty self-explanatory. B tier. Good name, but it's not there yet. You're waiting for, a breakout or a breakdown. Going long, you wait for a breakout, and then better yet, you wait for a retest of that past resistance level that it just broke out over. That's good, great. That
It
but
needs the setup is there, but it needs a trigger. It needs something to push it.
Right. It's or you set an alert at a certain level, right? And there's no trade until the trigger. And I would also actually I have a different comment, but I think it's more of a tier 3 than a tier 2. This is kind of like, it passes the liquidity test and the range test, but it's just, the levels aren't clean. And so you don't want to just buy because, like we've said last week, you don't want to just buy because it is down 20%, right? That's not a good trade. Then tier 3 is something that is either has a catalyst or it's going to have a big movement potential. And I would even venture to say I would put some kind of smaller caps on here, like micro caps even. If you're looking at some kind of riskier flyers in air quotes, I get a lot of people are like, oh, give me just some flyers, All right, well, so you want something that you're okay with going to zero? Like, no, not zero. Okay, well, then I'm not, but catalyst, right? Earnings. If earnings are coming up, that is something that you need to be aware of before you enter any trade.
But you have these on your list in case something hits, so you're aware of them. Basically, it's something when you have your list, you should be looking at those stocks multiple times a day to see what's going on. Have your alert set. Alert hits, go look at it. What's going on? Typically, I'll have a separate list that I do of the ones I'm watching, and I can just flip on TradingView. I can just go from one list to the other and instantly see up, down, where they're at. And if there's something that interests me, then I can click over to it. It's pretty easy and quick.
TradingView makes it pretty easy.
Yeah, the tier 3s are they're something that you don't plan on trading unless this one major thing happens. In my mind, that's how I think of them. It needs this. Boom. It needs to have good earnings. If it has good earnings, then I'm looking at it tomorrow. If there was a big report that came out, okay, let's see how it reacts. What's the volume doing? And trying to catch it that moment, probably not. If it was that great of an opportunity, I would have been in it probably already, or have been looking. It would have been an A or a B. But the fact that it's a C or a tier 3, it needs more help than it's probably going to get in one day. But you keep it on your list, so you've always got something you can fill back in.
Yeah, and tier 3s honestly can make some of the best trades, but they're also some of the most risky trades. And APLD is a good example, right? We all hopefully traded APLD from 10 to 40, right? That was one that I've been on since July, and talked about ever since we started this show. But that was really a catalyst trade. I mean, they had to execute on their data center. Right? There was plenty of risk, right? There was plenty of risk, so that was a catalyst trade. And just like whether it's an FDA approval, a lawsuit, and M&A. All of these things are kind of the same, right? And look at the market cap. If it's sub 10, you should probably trade smaller or skip altogether if new. If it's sub 10 billion, it's like just be cautious. So we'll go into a little bit more detail on these tier lists. So tier 1, Mike, I'll let you take this one away.
Yeah, we already talked about all of these, but it's kind of putting them into an order for you. Are they liquid? You can get easy fills, that spreads are tight, enough range to pay you. So if you're getting in and it's at a top of almost at resistance, probably not a lot of room unless it's going to break through. Not ideal. Has to be a clean chart. If you've got a chart that's massive wicks all over the place, and I wouldn't call that a clean chart. It's got to be obvious as to where your levels are, your support resistance for one. the clear catalyst and technical story that comes, you can get that again on TradingView. Just click on the news button. You can go back and see all the news, or a lot of you guys are on X. You'll see it, type in $ in the ticker, and it'll bring up everything current that people are talking about. A+ location, at support or resistance. I got a really good one coming up later in the show. That's one of my A setups for this coming week.
You don't want to miss it.
No, don't want to miss this one. But I like what it says there. The if X, then Y rule. If it hits this, then you're going to do this. I mean, that's what you should be putting down on your list when you're developing it. So if you have, I don't know, AMD on your list, okay, well, it's here. If it touches this level, then I'm going to get in, and where's your out? Here's resistance. You should have that written down and know what it is before you even enter the trade, but have it set. So if this happens, then I'm doing this, is basically what it says.
I'm really glad that you mentioned stop losses there. Even though you have a thesis, it doesn't mean it's going to work out every time. So yeah, always good to make sure you have your risk predetermined as well. Tier 2 prevents forced trades, like we talked about earlier. These are ones that are in, they're maybe approaching a sweet spot, or they're ones that you just like the industry, but they're not at the right place yet. It's whether it's, a breakout and a retest of a key level, right? Say something had a resistance that it just couldn't break at $95. It breaks out over $95, goes straight to 110. You go, shoot. I'm not, dadgummit, I'm not gonna, I'm just gonna buy it at 110. No, wrong. Nope. The best thing to do is always wait, because almost more often than not, it's gonna come back down and retest that level again, and many a time. Just
important.
Just trust me on it.
I love what it says there at the bottom, though. No trigger equals no trade.
No trigger, no trade.
So wait for your trigger. Whether it's, and set those alerts. You can set them. They're so easy. Again, I don't mean to, they're not a sponsor by any means, but TradingView is a really good piece of software that you can easily, you draw a line and you get the option immediately to set it as an alert. You can put a note in there as to why you set it to go off, and it dings, it sends you an email, sends you a text, whatever you want, and you'll know instantly when it moves there. But no trigger, no trade.
Mike is selling out hard for some TradingView merch.
I think he sent me a hat or something, man. Come on.
Goodness.
Brother's got to eat.
The amount of people we've pushed in that direction. I know I have. I love that. I love TradingView. I'm a user. A reclaim of VWAP, which is, volume weighted average price. Mike's talked about that plenty. After a flush would be, a nice little day trade, technical setup. Not so much on the daily where I'm looking. Hold high or low at support, meaning if, you want that, this can apply to any time frame. You want to wait. If something's going down, you want to watch for it to make it. Say it bottomed, you think, and then it's went back up, and then it's coming back down, right? To kind of do that retest. You kind of wait. You want to wait until it gets there, and then see how it acts, and then you want to see it catch some bids there and find some support, and then start moving back up a little bit. That's when you trick. Those are the best entries. Those are the best ones, and they feel so good when you just hit them hard. So patience again. These are tier 2. When things kind of hit up against resistance, and if things are compressing or just kind of making a lot of people call it a bull flag, but if it's just kind of consolidating right up next against resistance, that's usually a sign that it's about to go higher. If something whipsaws off of resistance, that's usually a no-go. But usually compression up against resistance means expansion. Not all the time at all, but it's something to watch, right? That's what I mean. Like, these are tier 2s. You want to wait until the breakout and come back down and test it. Then that's a tier 1. Relative strength shift versus market, like we've talked about. If your stock just looks like it's not relatively, the way I read this is if your stock is not working, in tandem with the market either way, there might be something funky going on. Wait until it seems a little bit stronger. No trigger, no trade. Catalyst list, why it's moving. There's a lot of things that can make something move a lot. Earnings, which has outlook/guidance in there, which is the most important thing. FDA trials, M&As, or buyouts. After your earnings, you're going to have upgrades and downgrades. And then sector news, right? I mean, especially stuff nowadays with all the stuff with the Fed, with Trump, with all the things that are going on geopolitically, which contribute to oil and all energy stocks. Whether anything AI related, one AI company reports bad, all the AI companies do bad.
It's kind of like last week.
And that's the chippers, the chips. They all are going to move together for the most part. But sometimes they'll do inverse, right? Sometimes in the past, it's like, no matter how AMD reports, it's going to be bad for Intel. This is, before now, which they've obviously kind of moved their business a little bit different. But AMD, if they reported well, Intel would go down because they're competitors. If AMD reported bad, Intel would go down because the industry's going down. So it's like...
Yeah. I gave up on trying to make sense of anything on earnings a long time ago. It just makes no sense. Well, there's a double beat and they're down 20%. What?
Yes, precisely. And that's why we're, when we talk about catalysts, it doesn't follow logic.
Yeah.
Trades...
You miss earnings by 1% and it just crashes. You're going... As somebody that's involved with running a company, if I'm off by 1%, I feel like I'm a hero. That I got that close, Anyway, the beginner rules there, I think, are key to, trade smaller. The catalyst ones, these are your last resorts. Something happened, you're going, okay, now it's got your attention. Go a little bit smaller in size. Be wary that, it can whipsaw or you get halts going on. And God, I used to be in those all the time when you start playing these smaller stocks. 25 halts in an afternoon drives you crazy. But then don't average down. Big mistake. Now, especially when it's this tier 3 type stock, I think. So, and avoid headline gambling. That's pretty obvious. Somebody comes out and says something and boom, everybody's jumping in it. And then you see it 20 minutes later. And as you're buying, they're all selling.
Avoid headlines. That's a big lesson. Just don't trade the headlines. You don't have to. There's trades other places. 5 traits to learn and trade accordingly. Speed. By the way, we're talking about stock personalities. You got to learn how they move. So the 5 traits of a stock to learn and trade accordingly. Number 1, speed. The stock either is going to move slow, medium, fast, somewhere in between. That totally changes the way that you think about your risk and your targets. Because if you enter something, you say, oh, well, I think this stock, could go up 3% and I'm going to risk 1%. And that's a 3-to-1 risk to reward. That's great. But the thing is, this stock moves 3% in both directions in the same day. Usually, like if that's its true range, then
what comes to mind is like Microsoft doesn't move a lot. At least anytime I look at it, to me, I would consider that a slow mover as compared to like Tesla, which rockets up and down 50 times a day.
Yeah.
So it's. Apple used to be that way. I think it's gotten a little bit quicker. It's probably more of a medium speed on the day. And again, this is my opinion, but based on what I trade, you all might be thinking, are you out of your mind?
And I think I think everybody has their own tolerance, right, for these things, especially for speed. And even if you have high tolerance for speed, it doesn't mean that even when you're trading commons, I trade commons and I hold them for a long period of time. Mike day trades options and he holds them for 15 minutes sometimes. It doesn't matter. You may have a high tolerance for speed, and you still get caught off guard because you haven't traded the stock in a long time, or you haven't traded it before at all. Even if you haven't traded it in a month, sometimes it can really change. And so, all of these things can change really. The second one here is another big one. It's whether it respects support and resistance levels or not. Whether it's very, very clean. I mean, some are very clean, and some are sloppy, kind of like very, very wicky, and they just kind of jump all around the place. Sometimes that means that they're a little less liquid, but not all the time. Does something grind, or does it? Or snap back like a rubber band, right? Is it a trend stock, or is it kind of a mean reversion stock? And by that I mean, Mike, I'm sure you probably have something to share on this one, but I mean, it's kind of, you need to decide when you're trading something, just in general, doesn't matter the stock. You need to decide whether you're trading the trend or you're trading kind of like a mean reversion play, which I would say a mean reversion play is going to be a little shorter term, whereas the trend would be a longer term hold.
Yeah. I mean, and again, I look at these, and every one of these describes Tesla to a T. You would be insane to trade that stock, but it's my favorite stock to trade because there is so much action on it. But again, it took me a long, and I don't trade it nearly as much as I used to. I traded it a lot more before it split. After the split, it completely changed. It traded totally different.
That is actually a very interesting thing to notice. These stocks can change after splits. They really can. They really can. Wickiness kind of already went into this a little bit.
Yeah.
If it wicks all over the place, sometimes it means it's just not. There's not a whole lot of conviction, or maybe there's too much. So yeah, just a lot of wicks, I generally stay away. Liquidity and spread, again, more of an options thing, but not necessarily. You need to be able to get an easy fill on any trade. Mike, you want to take this slide, the watch list scorecard, the quick checklist?
Yeah. Add tickers only if it checks most boxes. What we're saying there is, does it have? You're asking yourself these questions. Does it have liquidity? Where is its range? How clean are the levels? If you can get 4 or 5 of these that are all lining up with that particular stock you're looking at, add it to your list. I mean, these are all great things to be looking for. And again, it comes right back to that very last one. If X, then Y. Trade your plan. If this stock hits this level, then I'm getting in long, short, whatever your conviction was on it. But I mean, this is a quick one, kind of like we talked about before on indicators. Waiting for 2 or 3 indicators to come into play at the same time, they're golden. I mean, that is like a super high win rate. The same here is before you get in, look at some of these things. If you can get 4 of these to click, or you can put a check mark next to it, then you're probably on the right track. I think that's all that we're saying here.
Now, you got to run it like a pro without living on the charts. Weekly, on the Sunday, you got to build your universe. You got to build the stocks that you like. You got to mark higher time frame levels and then note any upcoming catalyst. The night before, you narrow it down. Maybe it's 10, maybe it's a little more. Assign tiers and alerts. And then write 1-sentence plan per name. You can take notes within TradingView. The morning of, narrow it down to 5 to 8. I'm more on the 5-ish side usually. Pick 2 primary names, 2, maybe 3. Know your key levels there. Support and resistance, gotta know them, and watch how it responds to those. After close, grade your trades, whether it's a win or a loss, and note the personality. Remove any junk tickers that you kind of go, I don't even know why I was watching that. Probably something you got off social media. And update your levels, always.
Yep. When it comes to updating levels, I would go in there and I would start with a daily. This is the way I do it. I do it daily. I look at a 4 hour, 1 hour, 30-minute, 5. Sometimes you can eliminate the 4. Sometimes I just go and look at the daily, the 1 hour, and the 5. It depends on the stock and how much it's moved. That's something that you just need to get your own niche for.
Bingo. You want to take this one, Mike?
We had here, if you fix these, your results usually improve fast, and that is so true. So the things you want to fix, FOMO is one that kills so many traders. Make sure you're only adding when the criteria is what you said, if and then. If it hits this, then I'm going to do that. If it's not there, don't, just because it's made a big move, don't jump at it right away. Make sure that your triggers are hitting. Too many catalyst names. That one seems to happen a lot. Size down or skip it until you're consistent. There could be somebody that comes out, they got a short report that came out and the market goes crazy, and tomorrow it's right back to where it was. Too many tickers. If your concentration is spread so thin over 20, 30 things you're watching during the day, nothing good comes of that. As we said before, 5 to 8 in the morning, I typically have maybe 3 to 5, and 2 of them that are my primaries. Messy liquid charts. If it's sloppy, you'll be a sloppy trader on it. And there's a lot of them that are that way. It needs to follow some sort of pattern. It needs to be within that support resistance. If nothing is aligning and it's very wicky, stay away from it. If you got no alerts coming in, let the price come to you. You should have set your alerts already, had your levels set, and don't get anxious. Be patient. That's what I got for that.
Price come to you.
Yes, sir.
And do this for, sorry, I just probably white noised the mic and broke a few ears. My bad.
Easy killer.
Do this for 5 sessions. Build a 3-tier watch list. Tier 1, tier 2, tier 3. Actually, the tier 3s can be pretty good.
Yeah.
But just make
they're
sure they're in.
A tier 3 either gets off your list or it should move into a tier 2, tier 1 at
some point. But you
and
got to
again,
build
really,
the case.
instead of 5 sessions, I would say do this for a month.
Do it for a lifetime, Mike.
Yeah, true. But you'll see the results. You'll see the difference. You'll probably see it in a week, but I would stick to this plan for a month and see. It'll help you convince yourself. As we said before, so much of this is psychological. This will help you with that. It'll show you that by doing this and following rules, you become better.
Yeah. Yes. Pick 2 tickers and write a personality profile. You can do this every day. Pick 2, maybe a new one, maybe not. And you can really just learn this from watching. Speed, wicks, the level respect, trend versus range, and take a few notes. Just jot down some notes. Again, you can do this within TradingView, and honestly, it's often cool to go back to those notes.
Or keep a journal. Put them in a journal.
Yes.
Throw them in a spreadsheet.
Big journal.
Spreadsheet.
I've done that too.
You can add all your comments for a lifetime under each ticker in a spreadsheet. It's pretty easy. It's easy to go through and sort.
Spreadsheet people, I know you're out there.
Yeah, it's not me, but
I've been all of these. Only trade tier 1 and tier 2. No random names. And then after each session, write 2 lines. What worked, what to change on both the winners and the losers. Okay? Got it? And in closing, your watch list should reduce decisions, not create them. Let that sink in. Your watch list should reduce decisions, not create them. Should make
you've already got it figured out if you've gone through all these steps.
Clear. Yep. Yes. Make things more clear.
So
now I know Acro wanted to do something special today. He wanted to share some examples.
I'm in a giving mood today.
He is giving. He's always giving. Tell me what I'm going to go look at.
Well, we usually here we get into our Sunday banger session, but I think today, in keeping with the theme, maybe just pick a few, but kind of go through them as an example. You see where I'm at here?
Didn't mean to have this dirty pig Carvana on the screen. Oh, sorry. Somebody got to the short report before I did. Darn. By the way, you're sharing your screen. Okay. Right,
Yeah, I just flipped over. So here's this is one that I just love the way it looked. And I'll kind of explain what I got going on here. So Meta is one of my tier 1 or A setups coming into this week. The red box you see down there is kind of I do this a lot. There'll be red or green boxes sometimes. The red boxes, if it goes down into there, I'm staying away from it. And you can see it's sitting right there. That level at 640 is a solid level. What am I on here? I'm on the 1 hour. Let's go to the daily. So this 640 level here, it goes back. Right now for those listening, I'm back in December of 24. That was a big level. And it's sitting there right now. I fully expect it's only had 2 green days, basically the entire month. They got hit basically because of the CapEx money that they have allocated towards AI. Investors didn't like it. I think that, and there was a bunch of stock being sold by Zuckerberg, but that was all pre-planned, already preset. That was all for tax purposes. So I think a lot of people read too much into it. And I think Meta is going to have a good week. I'm hoping it's this week or next. But again, these are not bangers for the week. These are simple why and how I put this on my list as a tier one stock. Let's see
what's your if X then Y? Just
if it maintains 640 and starts, I see something positive on the upside, whether it's off of RSI, if it's off of an orb, any of those. If I get 2 or 3 of those on the upside, I'm probably going to get in for 1 to 2 months out.
So if it
maybe a little shorter, I may actually go a couple weeks out and then add more a month out. But I think it's got a clean run all the way up to 680.
So if it closes lower on Tuesday,
then it's off my A list at that point.
Off your A list.
Yep.
There we go. You heard it here first, folks.
Yep.
Okay.
Didn't happen, so I'm staying away from it. The other one I have on here was my other one. It was Amazon. Again,
yeah, this one looks like it's just been getting clawbird.
Yep. But you have a really nice level at it, right around 200. That level's gone through. Here we're all the way back to July of 24. It came back to that level again, November of 24, made a run up, came right back down. End of November, touched it again, made a run up. Then it bounced around March of 25, right at that level, touched it probably 8 times on the daily. It finally broke through, came down. Then we had this gap up here. I'm not sure what that would have been.
Earnings.
Yeah, it was after earnings. I don't know what that was, but it gapped up. Where did it come right back to? 200. Then we had this long run until now. We're right back at 200 again. And the green box, I'm going to go down to a 1 hour here. That green box is kind of my playing field, I guess you'd call it. As long as I'm waiting for it to break out of that green box, then I'm going to get into the play. If it breaks below it, I would have to reevaluate. I didn't even look at that. My assumption is it will break up, and it's at a massive support level right now. So from 200 to 211, and then to possibly 220. So this one's got a lot of good upward momentum on it. And again, it was hurt by all the money being spent on AI. I think everything took a hit in the last week or so because of AI, which was expected. You can't run forever, right? I'll give you a quick B setup. B setup for me was Hood. This thing, I can't really figure it out, but my God, look at the dip that it's in. We talked about not catching a falling knife last week. I mean, this goes back to beginning of December. If you thought, oh, that's the bottom, no. Here we are, and it still may not be the bottom. That's why I have the green box again. My go, no go, my playing field, so to speak.
Yeah, a lot of people were clamoring to buy this one, and this was one that I said, you may just get a better entry.
Yeah. Well, they had earnings, and they did okay on earnings. They were almost 4.5% over on earnings, but they missed 5% on revenue. They've got a lot of stuff going on. I thought the credit card thing they were doing was going to be a bigger thing for them, but there's a lot of stuff going in there. They're tying it into, they also own a lot of Bitcoin. And with Bitcoin being down, everybody kind of panicked on the value of hood stock. But again, I'm just watching it. It's a B play for me. B minus probably. But that green box is my playing field. So basically from about 71.50 to 77.50, if it breaks out of that box to the upside, in my opinion, that would be a good indicator that it's got some room to go forward. That's it. I mean, my C's were pretty simple. Palantir, and because I don't play it often and I don't really care for the stock, but I kind of like the setup that it was at, was ARC. Something I don't think we've ever talked about on here.
I probably have.
But ARC is just in a big range, but it's down so much right now. And if we really go back to the daily, it was the perfect head and shoulders, and it finished it. So was that the end of the head and shoulders? Don't know. But again, green box is my playing field.
Yeah.
It's going to have to break out of there. That's why it's a C. It's got to go quite a bit before it gets out of there. It's got to go from 70 to basically 72, and it could do that in a day. I mean, it could do that Tuesday. But it's going to need something else with it to convince me. And that's what I got.
Love it.
So if there's any questions on how we find these or you want any other details, just ask it down below. And I'll be happy to answer it. Hit me with a DM and on X, whatever.
Yeah.
I find that they're easy to find because I've been doing it so long. And I know it's hard when you get started. I would struggle with this initially. It's, man, how do I find these stocks? How do I know what's going to move? And it does come from time, but it comes from doing things like we talked about. Finding support, resistance, make sure they're set, and wait for that trigger.
I mean, this is really basic, non-time consuming stuff too, which is cool. And then once you kind of get your group that you really enjoy, that you really are used to using, playing, you're home free. So please subscribe. Please follow us on whatever platform you use. I know the majority of you are not following. It shows us those statistics, or subscribed. So tisk, do it. Like. All of this helps us. And if we get enough likes, I'm not going to pick a number, I will make Mike buy a Tesla because he talks about it so much.
Cybertruck coming my way, baby.
All right. Have a great week, everybody.
Be good, everyone. See you later.